Hello dear traders, it's Petko Alexander from EA Forex Academy, and I continue now with the never losing formula. It's a formula that I have shown in some of my previous courses for the Bitcoin, but since the Bitcoin became a little bit expensive, the spread is much bigger than with the Ethereum, and I have decided to launch this course where I will show you again the never losing formula. And of course I will explain it in details, and I will do my best actually to explain it easier, simpler, because I received so many questions from beginner traders that didn't understand how it works, and I will do my best to explain it as clear as possible, as simpler as possible. So I will start from this white screen and I will do some drawings and I will do some calculations. So I really hope that everybody will understand. If you have already watched the course for the Bitcoin where I explain the formula, or the revolution course where I have included as well, and actually there is Ethereum example there. In this course you will see more examples with the Ethereum. I'm focusing on the Ethereum right now because it's cheaper to be traded, since the spread is nearly 10 times smaller than the spread with the Bitcoin. So to make it clear now for the students who have not watched the previous course with the Bitcoin, and this is the first course they're taking, the never losing formula is something that protects us from the bad trades. So we will be using the expert advisor to enter into the trade, but after that, if the price goes against us, we will use this formula in order to exit the bad trade with zero. So how is it working? The expert advisor is taking the trade. If it goes to the take profit and hits the take profit, that's fantastic. I don't need even to give you examples with that. You place the expert advisor on the chart, it hits your take profit, fantastic. What happens if the price goes against our direction? There is no stop loss, so our capital is at risk. We need to protect it. So here comes the formula which will actually exit the trade with zero losses or even a small profit. So one more time, I will do my best to explain it as simpler as possible. And if you have any questions, of course, at any moment, let me know. I will do my best to answer you quickly and in details. But here really I will put my best effort to explain it clearer and simple so everyone should understand it. So let's say we have placed the expert advisor and it opened a trade at the price of 690. Okay, so at 690 we have sold, right? The expert advisor has sold. So at this moment, let's say it's somewhere here, guys. I will use very simple drawing tools just to show you what happens. At this moment, the expert advisor has sold one lot size, okay, at the price of 690. As you know, the take profit of the strategy is $100. Now here, when I am using the never losing formula with the Ethereum, I modify it to $90 instead of 100. The volatility with the cryptocurrency recently fell down, guys, so make sure not to place unrealistic and huge take profits, okay, that probably will not be reached. If you keep your take profit closer, the more you will hit it. This is simply logical. So once again, once the trade is opened with the expert advisor, let's assume it is at 690, it opens a trade with one lot, and I modify this order manually to make it $90 of profit and not 100. Just I'm taking it a little bit closer, and this means that here my take profit will be at $600, right? So as I have said, if the price hits my take profit, that's great. You don't need to worry about nothing. And I will do my best to record more examples, but even as said, I don't need to record such examples because this is the best case, this is the thing we're looking for. If it happens, it's great. Now, what happens if the price goes against us? You sell, the expert advisor sell, but then the price goes higher. Obviously, you will start to lose from your account, right? Now, what I will do, I will place a buy stop once the trade is open, guys, okay? Once the first trade is open, this one over here, immediately I place a buy stop $30 higher. So this means that it will be at the price of 720. So at 720, I will place a buy stop, and this is a pending order, which means when the price reaches this level, it will enter into the trade automatically. But here, my pending order will be with 1.4 lot size. So at this moment, I will have this initial negative trade, and in the same time, if my buy stop is hit, I will have this positive trade if the price goes higher, right? And this buy stop will have the very same take profit as the sell position. So this will be at the price of 810, okay? Sorry guys if it's not exactly same distances like this one and this one. The idea is that from this line to this line is $90 and from this line to this line is $90. I think this is a little bit further. Anyway guys, this is not a drawing course and that's not the purpose of it, but I will just try to make it equal. So one more time, let's summarize it. The expert advisor enters short trade here. We modify the take profit $90 instead of 100. After that, if the price hits, will be great. What I will have? $90 of profit, right? If the price goes against us, I will enter $30 higher with a pending order buy stop with 1.4 lot size. So if the price hits this target for the second order, what I will have? I will have negative from the sell, which will be 120. Let me put the dollar mark so we know this is in dollars. And then I will have positive of 126. Let me show you why is that. This is because if I bring up the calculator, if I have distance of $90 times 1.4 lot size, what I will have? 126. As you can see, at this moment I will be out with $6 of profit. The price went against me and I will be on profit. This is one more time the case when the trade is opened, I place a buy stop just in case if the price goes against me, and if it does go against me, I will have totally $6 of profit, okay? And I will be out without losses, even the price went against me. At this moment, I will be out without losses, and I will place the expert advisor again for trading, because normally what I do when I place the expert advisor and it opens a trade and I want to combine it with a never losing formula, I remove after that the expert advisor from the chart, because as you saw, the expert advisor has an exit rule. So it is very possible that it will exit somewhere while I'm still in a loss. The idea here, guys, is that I'm using the expert advisor only to enter into the trade, only to give me the signal, and not only to give me the signal, but to execute the trade for me automatically. After that, I take over, I take control of it. Probably for the people who are just first time watching this, who don't know the formula, you will say, okay, what happens if I enter the buy stop but the price goes again lower, right? And this is the subject of my next lecture. I will explain you how we manage the formula if the price goes in this range and hits these levels a couple of times, and this is actually what I call the mid zone. So in the next lecture I will explain you what we do after the buy stop is hit but the price goes down again. Alright guys, stay with me here. This is very important. This is a unique thing that will save you a lot of losses, and if you manage it properly you will have only the good, the profitable trades, and you will exit the bad trades without losses. Alright guys, I will continue straight away with the next lecture where I will show you how we manage the formula. Cheers!